My friends, what is going on? Been a crazy week so far. I think everybody needs to start out this video and right now with just taking a little bit of a breather. Tension's high, AMC's getting blasted, and this is where a lot of people can wind up, saying and doing things that, they don't really mean. I've been trying to keep tweeting, but I'm not going to sugarcoat it, man. There's just so much trash out there that is just constantly, negativity, and they don't understand. And once again, like I've always said, it's easier to be mad than be educated. And so many people just want to be mad instead of be educating themselves in how to trade in this really crappy market that we're coming into. So I just encourage everybody to kind of take a breath, don't be a keyboard warrior, and just chill. Once again, nobody promised easy. However you want to look at it, whether you look at it as the people we're going against, the hedge funds we're going against, the institutions we're going against, it's literally some of the smartest people on the planet, okay? And if you thought they were just going to, roll over and take their beating on this deal, man, you're crazy. They're going to do everything they can to fight for, their money and their positions and everything like that, just like we're going to. So it's all part of the process. Once again, I believe in the play. I believe we're going to be fine in the end. So I wanted to just jump in here and kind of go over the trade that I posted on Twitter. Also, let's take a look at the chart. Let's take a look at the option chain and go from there. Okay, so before we jump into all that, as always, I'm not a financial advisor. Everything I do is for educational purposes only. You've got to make the best trades and the best decisions you possibly can for your portfolio because you're going to be the one that's stuck with it at the end of the day. Also, if you haven't already, please follow me on Twitter, Colin_Gladman. That's going to be the easiest way to ask me questions. And also, too, if I see anything that's newsworthy or anything like that, I always try to keep everybody up to date on that as well. So, speaking of Twitter, I retweeted that AMC CEO Adam, they went out and they acquired 7 new movie theaters today. So that's awesome. I don't know the exact logistics of those movie theaters. I trust, Adam, Aaron, that, they were high quality theaters that are actually making money and everything like that. I've said before in the past how if AMC has any theaters that are just limping along or anything like that, I sure hope they cut those legs off and get rid of those theaters as soon as possibly can, close them down, whatever they got to do, and focus on the ones that are producing solid income. Also, too, we've got a lot of awesome releases coming up. Sonic, honestly, that's not my kind of movie, but it did awesome this weekend. We've got Doctor Strange coming up. We've got Jurassic Park, we've got Aquaman, we've got Avatar 2, we've got Thor, my personal favorite, Top Gun 2. So there's a lot of awesome movies coming out this year. COVID fears are constantly subsiding. People are getting out more and more and more. So I believe a return to normalcy in the theaters is going to be something if our freaking government can get this inflation thing under control. The CPI number came out today. 8.5% was that number as far as year over year inflation. So it's obviously crazy. It's like a 40-year high, I believe. We got to get that under control. The markets actually, honestly, and I was wrong. It kind of did the exact opposite of what I thought. I thought it was going to come out tanking this morning, and then we might have a rise towards the end of the day. And instead, it came out on fire this morning and then tanked throughout the rest of the day. So pretty much, I was right from what I thought the market was going to do. I was just wrong in the timing and the direction of it. So, yeah, I think that's pretty much everything newsworthy that I wanted to go over. So let's take a look at the chart, all right? The first thing I want to do is I want to explain the trade that I made on AMC. If you talk about I'm trading AMC or anything along those lines on Twitter, oh my gosh, does the buy and hold cult come after you? And it's just because they don't get it. They don't understand it, and so they just want to yell. So I want to explain to those of you who take the time to watch my videos, thank you so much. And if video is helpful to you at all, please like and subscribe, tell your buddies about it. I recently saw that I went over 3,000 YouTube subscribers. That's crazy to me, but I absolutely love it. I hope you're learning something. So let's learn something about this trade together. So I tweeted out on April the 8th. It was in the morning. Let's see here, where we were at. Yeah, it was like right in here. AMC was trading right around the 1850 mark, and I said, I am selling some cash secured puts for $17.50 with the expiration date being on April 14th. Remember, the market is not open on Friday this week for Good Friday, so Thursday, April 14th is going to be the last day this week. And the reason that I did that was because of this bounce right here. Okay, I was quite confident in my TA that if we did, so I had two strategies here. Okay, so my strategy here was when I purchased them right here, I almost closed them out right here, but I decided not to because I thought I could get more premium out of it. So, and here's why, and I did. Right here is when I sold them. Okay, and then I went back in. No, I apologize. Right here is where I did them. It was first thing on April the 8th. So AMC, let's see here. We were right around, right around that 1850 range. Okay, and so I either thought we would continue and push back towards the upside, or I thought we would at least get a relief bounce right here. And this line comes from right here, back from January 24th. You can see this line has provided a lot of support and resistance. So I knew that I would get a support bounce right here. Didn't know how big it was going to be. Obviously hoped it would be pushing back up, but I knew I would get one. So here, made the trade. A cash secured put was basically I was agreeing to buy 100 shares of AMC at $17.50 if that price was at $17.50 or below on Thursday, April 14th. I personally did 20 contracts. The premium for that was $72 a contract. So in total, I made $1,440 in premium. Then, looked like we might get the bounce right here, but that didn't happen. We spilled over. But then Monday afternoon, we had the not huge, but we had the pump up, after coming down here and touching this line, right around that, 1775 range, we started pushing back up. And then I knew the consumer price index, so the inflation data was going to be coming out the next day. So that's where I closed out the trade. Okay, and I closed out the trade at, well, let's just go in here into my Twitter. But it was like 43% gain on the premium. And I was hoping to get more than that, but once again, I didn't want to hold it when, the CPI data was going to be coming out the following day, because I was worried we might have a big ugly red day, which is what we did have. Yeah, so 1440 is what I made on the initial trade, and then I bought all the contracts to close. So when you sell a cash secured put, you got to have the collateral for it. Once again, I did 20 contracts. So I put the collateral on the line, made 1440 initially. So you sell to open those contracts and you buy to close them. And when I went to buy to close, it basically cost me $800 to close them out. So I made $620 on that trade. And what I was trying to tell people is I was fairly confident once we got up here, I was fairly confident that I was going to be able to buy shares down here, or at least close to that. And that's exactly what happened. So now, rather than being fully committed to having to buy those shares at $17.50, if I feel like we might see more downside, which honestly right now I do, then I can buy them at a much lower price, and I have an extra $620 of buying power to buy more shares with. I also could just use that $600 into my dry powder for other plays, buying power, Or if you literally needed to pull that money out and pay a bill or anything like that, you could do that. So this is why I'm a huge advocate for learning how to trade. And cash secured puts and cash covered calls are not something you have to sit there and babysit 24/7. Like you have to do when you're the one paying the premium and theta is a killer to your play. Yes, you have to be able to babysit those options, okay? You got to be able to focus a little bit more like a day trader. When you do cash secured puts or cash covered calls, you do not have to babysit the trades quite as bad, okay? I usually, and not with AMC, but with the other plays that I do on, like my BBIG trade, go back and watch that video that I made. I made $1,400 like that, no problem. I didn't babysit. I just let them expire worthless. So it was the world's easiest play. So you do not, if you understand them and you have the capital for them, the wheel strategy is a great strategy versus AMC versus any other place. So, like I said, this is why I'm encouraging you. Now, I think we'll probably get some, I think the most likely thing, and we'll jump into that why I think we might see some more downside, but that's my most likely scenario. Yes, there's a bullish case, and we'll go over that as well. But like I said, now I have an extra $600 to buy AMC shares with. If I just bought, that same 2,000 shares right here, I would be down like $2,000 right here. But I didn't. Instead, I just put my money to work for me. I closed out my contract, and now I still have all my money plus $600. Where now, once again, I agree it's only a loss if you actually sell it. However, a lot of people could have gotten stopped out or anything along those lines. This trade made no problem, put $600 in my pocket. You just got to learn how to do it. If you're on Twitter and you're yelling at me 24/7, learn how to do this instead. And life won't be easy, but it'll be easier, I promise. So what are we looking at now? But anyway, that was just kind of a walkthrough of exactly why I made that trade, when I made it. I was confident on the relief bounce, knew I'd be able to close my contracts out, and so that's why I did it, and that's why knowledge is power. So learn it, my friends, and feel free to ask me questions about it. So right now with AMC, all right, moving on past the trade. Right now with AMC, we finished up this accumulation phase right here. We had our local sign of strength. Now we're in a backup last point of support phase. And honestly, this is starting to come down where it's getting, frustrating is a good way to put it. I was hoping this wasn't going to happen. I'll show you what my bias was. My most bullish case was going to be this right here. So from our uptrend right here, where it met the top of this long-term resistance, okay, where you can see we've had multiple reaction points right here. We had the fake breakout, the touch, and once again, this is where I thought we might see the markup phase right here, and unfortunately that broke down. And once again, I think it was because of the overall market, but it comes from our all-time high, and my bias was we were going to come down here, we would touch, which would also basically be our 0.5 retracement. So our most bullish retracement would have been if we would have come down here to the 382. And you can see that at the 382, we had a good solid reaction, but we kept getting drugged down at that point in time. Also too, guys, I want to address being in log scale with log fibs. I do both. Okay, so when you draw your fib, if you're in log scale, so you can see, or maybe you can't, but in the bottom right, if you're on trading view, is where you can go in and out of log scale. So that's linear scale, and this is log scale. And log scale shows you the percentages, especially if you're looking at larger moves over a long period of time. I do 99.999% of my charting in log scale. So if you want to follow along with me, you always need to be in log scale. When looking at the fib retracements, I look at both, okay? I said on Twitter today, I have searched far and wide on whether or not you need to be, your fibs need to be set in log scale or not. And essentially what it does is it's just going to be changing your ratio. So so this is fib on, and then you can look behind, that's with the fib off, fib on, fib off, so on and so forth. And I think they're both valid. I think both give you levels at which you need to watch. Okay, so you need to, like I said, you need to look at both of them. Okay, so with log on, once again, that was going to meet right here at the 0.5. With log off, then it would have been right here at the 0.618. Okay, so they both give you valid levels. It's just depending which one you want to look for. And what I try to do is I try to look at which one is giving me a better outlook or a better picture, which one is having better reaction points. So in this case, with AMC, I think that it is going to be with the log scale turned on the fib. So you can see right here at the 382, we had some good reaction. The 0.5, we had some good reaction. The 0.5 was also resistance on the way up. We had a nice little reaction right here at the 0.618. And then now that same 618 is acting as the resistance that pushed us down. So the reason I think that downside is the most likely case scenario is because, so right here, the 618 provided support. We pushed up and then we got knocked down. And guys, I'm on the hourly chart right now. Most of my charting for AMC is going to be done on the 1 hour, the 4 hour, and the daily. I think that's the most important. I'm always, macro is better than micro. I will look at like the 5 and the 15 minute when I'm looking at kind of some more intraday stuff and what's going on, but I mainly do that to look at volume. I've always said that there are key levels on every stock and every movement, and virtually everything else that happens is a little bit of noise in between. Okay, so a lot of my charting is always going to be done on the 1 hour, the 4 hour, and the daily, like I said. When it comes to breaking out of wedges on the intraday or anything like that, that'll be done on the 5 or the 15 minute. But try not to get lost in the weeds on the 1 minute or the 3 minute, and definitely don't be the person who's always posting 1 minute candles and acting like it's the world's biggest boom boom when it's a 0.5% move. Okay, so once again, looking at this, so looking at our fib, we hit the 618. We bounced up, we came down, it provided support, we came down, we hit our long-term support from that January 24th, we pushed back up, and look what happened at the 618. Just a massive, massive red candle, and as you can see, it's on increased volume, what pretty much caused our push down the rest of the day. So because we broke and we retested, and then we broke down again, that leads me to believe that we're going to come down here to the 786, which is going to be right around that $15.90 range. Now, that doesn't have to happen. I just think that's the most likely thing to happen at this point in time. The most bullish thing to happen is I think we'll come back up here. We'll probably get kicked off this long-term resistance, which is also kind of like the golden pocket area, and then come down and refuel and start pushing back up. And I do think there's a case to be made for it, and it's because of max pain and what the option chain looks like. And like I said, we'll get into that in just a second. So now, a lot of you guys have been following me, and if you're new to following me, please know and understand I'm not going to ever give you rocket emojis or hopium or anything along those lines. We're going to face the facts and the reality of the situation. If you need the hopium, you came to the wrong channel and the wrong person. I understand if you need it, but you're just not going to get it here. We're going to look at, once again, reality. So now essentially what we're looking at is this right here. So this bear trend right here extended, and then we did have a breakout, and the breakout was on some increasing volume until we hit that 6.8, and then we got pushed down again. So now the most likely thing once again is to come down here and retest this bear trend, which would take us towards the 786 area before starting to move back up. Now, once again, as you guys that have been following me know, I think we're setting up a very nice Elliott wave theory principle here, where essentially this is wave one. Here, I'll draw it for you guys real quick. Where is that little Elliott wave pattern? Sorry. Okay, there we go. So basically we got wave one going, wave two is a corrective wave, wave three would be our biggest, most explosive wave, wave four is corrective wave, and wave five is another move up. Okay, so none of these levels are exact. We'll look at exact levels here in just a second, but essentially this is what I'm going to be looking for out of AMC. Now this is still intact so long as wave 2 does not retrace 100% of wave 1. So if we break $12.90, then this will become completely invalid at that point in time. I don't think that's the most likely scenario, but every time we do continue to pull back before we start moving up higher, it does make wave 3 a little bit more muted, okay? And here's what I mean by that. So how you figure where wave 3 could go is you use your fib extension, where you go from your low to your high to your next low, and the most common move is to the 1.618. So that would take us to the $50 level. Now, if we come, now that's assuming it started essentially right now. If that comes down and we hit that 786 around the $15.90 level, we'll call it right there, then that 1.618 takes us to 50. So every time we come lower, it eats away at what our potential upside might be. Now, the January and the June run, we hit the 3.618 on wave 3. And let me go over here. I'll show you. So even though it was a crazy squeeze moment or anything like that, TA still worked, and TA still provided you. So we go from the bottom here, which was wave 1, to the top. Then we came down to the bottom of wave 2. And you can see right here where wave 3 topped out before your wave 4 pullback, and then wave 5. Wave 3 hit that $32.71. Okay, it actually went a little bit higher than that, but where the candle closed was right there. So even in crazy squeeze situations, TA can still be very accurate as far as what the potential targets would be. Okay, so if we hit that, if we went all the way above that, that'll be all the way up to $100. Now, whether or not that happens, depends on how big the option chain is loaded, what the overall market looks like, what FOMO looks like, all that good stuff. So overall, in a more macro, when we zoom out a little bit, I am still bullish overall, even though short term I'm bearish. So you can be short term bearish where, in the long haul, you're bullish. I wouldn't be buying shares if I wasn't bullish on this thing. I would sell AMC if I wasn't bullish on this thing. So let's get into the option chain real quick. So, sorry, before we do that, let me just say, I think short term downside is a possibility if the overall market kind of stays ugly, okay? But I think I'm about to make a case where it's just as reasonable to be bullish as well. So max pain is at $20. If we look at the option chain, if we look at calls at $20, it's 26,200 contracts that are currently out of the money. And remember, every time we look at contracts, each one of these values is 100 shares. So max pain is at 20. If you go down here to puts, as far as puts go at 20 that are now in the money is 17,509. So I really think that around this 1950 range, getting somewhere around that 1950 where you get where we get some of these puts, like the 14,000 puts at 19, we get those out of the money and then keep the 20 calls out of the money. Okay, so everybody in this 26,200, yeah, so once again, 26,000. I don't remember if I just said the volume or the amount of contracts, but there's 26,200 contracts currently at 20. And then down here, puts at 19, there's 14,709. So getting those out of the money and then keeping the $20 calls out of the money, I think is the most plausible scenario. So that leads me to think that sometime at the end of this week, being around that 1950 range, I think is going to be our most likely scenario if we can recover. With the news that AMC bought some theaters, I know I've already got everybody just going, oh great, we bought more theaters, that means we're gonna go down. And it's always possible, but it was up like 10 cents an after hours or something like that, which once again I always say take with a grain of salt. So I think if we push back up, somewhere around there is going to be our most likely range. So just kind of wanted to jump in here, let everybody know that, we're seeing some downside, but if you'll just chill, let the market do its thing, I think my bias, once again, is everybody's going to be okay in the end. Even if you don't see this, crazy MOAS or anything like that, I think AMC is a solid investment. With everything that they're doing, acquiring more theaters. We've got a lot of blockbusters coming. People are going to be going back to the movies. They bought a bunch of, gold and silver with their investment in Highcroft. And so I think it's a good, solid investment. That's my bias. Obviously, once again, do what is best for you. But this move, it's definitely more of a pullback than you wanted, than I wanted, or anything like that. But overall, so long as we make a higher low, so obviously we made a higher high than where we have been. So long as we make a higher low before starting to move back up, the overall bullish momentum is intact. We just need a little bit of help, from the overall market. And once again, leading up to, the GameStop split and all that good stuff, we're going to, I believe if GameStop as news that comes out that rockets up, whether it's their, NFT shop, whether it's their split, whatever the case may be, like I said, I believe AMC is going to go right along with it. But that's always, of course, that's why I hedge with both. I own GameStop and I own AMC. So just sit tight. Patience is key. Don't just get on the internet and, keyboard warrior and screen manipulation all day, every day. You're not helping yourself. You're not helping anybody else. So that's my 2 cents. Hope you learned something. Once again, like and subscribe if you did. And do what's best for you. But I'll see you guys tomorrow. Have a great evening.